Good day. My name is Joe Nelson, and I'm your insurance agent. I want to take a second and talk to you about the state of the insurance market, what's going on with St. John's, and the reason why. So, you've received this email as one of my St. John's policyholders, and fact is that this problem that's going on with St. John's is a problem across the industry. I want to share with you some information that I have. Now, these resources that I have are going to be sourced from insurance magazines, public information, information filed with the Florida Office of Insurance Regulation, as well as rate renewals and even Claims Watch, which focuses on the number of claims that have happened over time or that are filed depending on the state. This is an older diagram. I made this in September of 2021. So I have the information in my head about what went on last year, but a lot of my numbers are going to be from that. I'm going to share my screen and we'll go from there. Excellent. So do we have a presentation mode? There we go. Okay, so this is my report on the Florida insurance fraud and tort reform, or what necessary actions need to take. So the state of the Florida insurance market is simply this. Many of them are losing a lot of money, okay? A lot of the money that has been lost is a result of underwriting losses. So think about this. These companies have something that's called a combined ratio. And you can imagine that it's largely something along the lines of like a profit and loss statement for a company. You have your expenses, which are divided into two categories. You have essentially your first, which is going to be operating cost. And then second is going to be underwriting losses. Now this, I guess we could refer to it with most normal companies, is going to be something along the lines of like product cost, okay? So when you look at a combined ratio, essentially any number at 100 means that for every dollar they took in, they spent $1. Now, it's okay if that number is larger than 100%, because insurance companies just don't sit on this money. You know, like your bank, they loan it, they buy bonds, they invest in the market from time to time, and they also keep some of the money on hand. Now, with the money they take in, insurance companies have to be able to hold aside a certain amount of money with liquid cash, but then the rest of it can go to their investments. And other times they also purchase coverage called reinsurance with some of the money, which is insurance for insurance companies. Essentially, it can work one of two ways. It either transfers the risk to some other companies, so they will pay out like a percentage of the claim, like you purchase reinsurance, and they also agree that with whatever it is, they're going to pay out 25%. Or if your claims threshold hits a certain number, then they pay. They essentially just reimburse the insurance company. So they're hedging bets on the insurance company being able to do this. When we look at the combined ratios for 2019 to 2020, we can see some big numbers, okay? To look at some of the big ones that we have American Integrity, which is 99% combined ratio, 102 in 2020. So we've seen that go up a little bit, but largely that they're kind of a solid carrier. When we go down the list, we're going to find big companies altogether. We're going to find ASI Preferred, which is Progressive Insurance from Progressive Home Insurance. They had 167% combined ratio in 2019. It went down to 130. Now, that's a losing number right there. Most of the time you really want a combined rate. Well, you want a combined ratio under 100 because it means that for every dollar you take in, you make a little bit of money. But if it's a little bit more, it's still okay because those investments will level it off. So scrolling down the list more, you know, again, we look for the kind of the big names, try to find out, Florida Farm Bureau. So running 116%. It's a combined ratio after a 105 the year before. Gulfstream, which went insolvent last year, had 125 in 2019, 282.3. And this number kind of repeats itself a little bit. you can see the companies that have the largest loss ratios. And then we look at St. John's. St. John's had a 683.2 combined ratio in 2020. Weston had 392.5. So what does this mean? Across the industry, it means that the average company, when we add up all the combined ratios in 2020, is 162%. So it means that for every dollar that they take in, they spend $1.62. You cannot run a profitable business or any business when you lose that much money. So what kind of happens? Where all the claims are coming from? Largely, the claims are coming from tort litigation. So essentially, Florida has something on the books called an assignment of benefits. So what happens is that when you file a claim, okay, or if you have somebody come over and give you an estimate, they can give you a form that says, hey, we'll file the claim on your behalf and we'll take care of everything else. So it gives them the right to be able to negotiate with your insurance company. So some of these contractors which walk around door to door and say things along the lines like, hey, we're over here and checking on one of your neighbors. There was a hailstorm the other day. Did you know? We got on the roof and there's a lot of damage. You can't even tell from the ground. But when we're done, did you want us to come by and take a look at your roof? And of course, they're going to tell you about all this damage that they find. And they're going to ask you to, they're going to tell you, hey, we can get your insurance company to replace your roof with just your deductible. And that's it. So, and they'll get you to sign an assignment of benefits. Sometimes these can also come from public adjusters, okay? So the other thing that kind of happens with this is you have these public adjusters and they will do kind of the same thing. Now, a public adjuster is an independent adjuster that can work with your insurance company or negotiate on your behalf. It's for them. Now, typically, the way that they're supposed to be used is like, let's just say that you're elderly and you can't negotiate for yourself, or maybe that there's a dispute. You have an advocate on your behalf. Now, they make 10 to 20% of the whatever the claim value is. And, let's just say like you have some water damage and your insurance company says it's not enough. You get a public adjuster, they go back and forth. Instead of paying out, $2,000, they pay out $10,000. I mean, hey, you got to cut a check for $1,000, but it's like $6,000 more than you got before. The problem with it is that a lot of these guys will end up filing massively large claims. Now, what does that mean? Like personal experience. Okay, so let's talk this. So I'm going to give you two, okay, that both came from Hurricane Sally in 2020. Both of them, I need to track and see what happened, but both went to litigation. Okay. I have an insured who admitted to me that he lost 5 shingles, just 5. Okay. And he signed up with a public adjuster who came out and basically offered to inspect everything and file a claim on his behalf. And they did. And the claim amount submitted was $110,000. Your insurance company has a duty, and it's a contract of indemnity. And essentially it says, we're going to put you back in the same situation as you were before. Okay. So when you have an older roof, okay, it's like having worn out tires. You don't file an auto insurance claim to replace your tires when they wear out. And a lot of times for your roof, you shouldn't file a claim to replace it because it's worn. If your roof's worn out and we cannot repair it up to code, they do have a duty to replace it. But in essence, it's not their responsibility to replace your roof. And I know that's hard to hear. Nobody likes to be able to hear that, hey, nobody wants to hear that they have to get a new roof. Okay. No one does. Nobody wants it. But if you went to a body shop, okay, let's just you went to go get your oil changed, right? And the guy changing your oil comes up and says, hey, I noticed your tires are bald. Look, I'll tell you what, I can get your insurance company to replace them. Yep. All you have to do, they're going to pay for most of it, but you'll have to pay for your deductible. And, I get 10% of whatever they pay out. Sound good? That seems like a scam, right? But that's essentially how this market for insurance fraud works. They come to your house, they knock on the door, they tell you that somebody else has damage, they tell you that you have damage, they show you some pictures, and there are things like popped nails and lifted shingles, but that happens over time. Many asphalt shingle roofs, the way that it works is it's felt, has some asphalt stuck on it that increases the weight and holds it down. As rain comes down or wind, it washes some of the asphalt out, and over time they start to kind of lift up a little bit because they don't have as much weight holding it down. But they wear out like car tires, like oil. It is one of those things about home ownership that is a part of it. It's about being able to take care of what you have. So instead, they get you to sign these forms, they file massive claims. Now, what happens? Of course, these claims are denied. So then they take it to court. In 2020, there were 85,007 lawsuits. Now, how does that compare to the rest of the country? Florida represents 8% of all homeowners claims across the country. We represent, but the thing is that they represent 8% of the homeowners claims, but 75% of all lawsuits against insurance companies. So it means that we're constantly, we have more lawsuits than anybody else. And when it goes to that, the insurance companies, obviously they have a duty to defend themselves. So what happens? Where does it end up defending ourselves? Okay, so they can defend themselves in the sense that they have to pay their lawyers. So if they win, they still have to pay their lawyers. But if they lose, that's where the argument for tort reform comes in. Because the thing is that they have to pay their lawyers. They have to pay the claim. They have to pay your attorney's fees, court costs, and what they also call fees and multipliers, which are things that basically go directly to the attorney or anything else. So again, some of this stuff, you see these things, right? Hey, $100, it's a gift card to Ruth's Chris, just for letting us take a look at the roof inspection. They're essentially just trying to be able to find a little bit of damage, sue the insurance company, knowing that chances are the insurance company is going to settle, because even though they know that your roof shouldn't be repaired or replaced, it might be cheaper to settle than it would be to take it to court, where if they win, they still have to pay their attorneys. And let's face it, attorneys are expensive. And if they lose, they could end up having to pay out a whole bunch. So this was an actual conversation that I witnessed on Facebook, okay, where literally a State Farm agent commented, and then we had a conversation from public adjusters on there. Federated National lost their financial rating in every state other than Florida, had to be able to non-renew all those policies and take rate increases in Florida. St. John's, your company, the eighth largest insurance company in the state of Florida, all the policies had to get transferred to Slide because they lost their financial stability rating. Gulfstream went insolvent last year. Tower Hill, Progressive ASI, Progressive's non-renewing all homeowners with a roof over 15 years of age. Edison, Florida Peninsula, again, some of those things. But when we look at public adjusters admit, Federated National, St. John's, Gulfstream, these are the companies that they specifically targeted. And 2 out of the 3 are gone. And Federated National lost all their policies, and every other state has to be non-renewed. When we go back to it and we look at these numbers, Federated National, 145% combined ratio. Maison, their other company, 143.20. St. John's, nearly $7 for every dollar that went out. And Gulfstream, nearly $3 for every one they're going out. Fact is that they're bankrupting you. Of the $15 billion paid out in homeowners claims since 2003, 71% goes to attorneys, 8% goes to homeowners. That's a fact. So in short, what happens, okay? There's legislation that passed last year. When the bill initially came up, it talked about reforming how people could sue insurance companies and threaten to be able to cut off a lot of the ways that insurance companies were exposed. It went through committee gutted it. And what happened was that we had a bill that instead of meaningful action, it gave a 10-day notice before a lawsuit was filed. It required me to be able to do one less hour of ethics every 4 years when I take my continuing education classes. And that's it. That's it. That's all it did. And what happens is that we have a forest fire, like in California or Colorado, not to put any type of, or not to trivialize what they are going through, but our property insurance market is currently a 5-alarm fire and it's burning. Some people, some of our representatives, both in the Florida House and the Florida Senate, take a look at the forest fire and they take a look at SB 76, which was legislation that was passed last year. And that was one bucket of water they threw on the fire. Many of them are saying that, hey, let's see what that one bucket of water does before we make any drastic decisions about what we're going to do next. But this is a major problem. We've seen multiple companies go insolvent. Many other companies are running operating losses or claims losses that far exceed the amount that they come in. So what's the resolution to that? They can either raise rates to make up for those losses. And sometimes, we have a couple companies that have filed for over 100% rate increases, which means that if your insurance was $2,000, it'd be $4,000 at your renewal or more. And they have to have that to survive. Or we have, or we pass meaningful legislation. We do. And that's what needs to happen. This happened to St. John's. It could happen to others. And so just so we're fair, St. John's was a good company. They did things the right way. Now, I focused a lot of my marketing just on the Gulf Coast, but we remember last year when the Surfside condominium collapsed. Now, there's a lot of reasons why that happened. Comes to find out that, it was an older building, it's over 40 years old. And, the engineering firm and the condo owners association knew that there was a problem. Okay. They knew that there was a problem, but they were delaying fixing it because of the cost, that it would be millions and millions of dollars to basically reinforce this. And they knew it was a problem and it collapsed. So could be liability on the condo owners association part. There could be liability on the engineering firm. Insurance companies at times, like if there's a claim, they also know that they can get their money back. It's called subrogation. So sometimes they pay out knowing that they can sue another insurance company to get some of their money back. A couple days after the collapse, I have a buddy, he owns an agency in Broward County. So he's down in Miami in the midst of all the insurance fraud and everything else. But he had insureds in Surfside. And he told me St. John's paid full policy limits within a couple days because it's the right thing to do. Other companies were waiting to pay out to see if there's any settlement, anything else they could go against, any type of subrogation that they could get. And St. John's paid. They did things the right way. And unfortunately, they were targeted by crooked lawyers and greedy public adjusters that don't have a duty to do anything besides make the most amount of money. So you get a new roof and they get a new Corvette. They got you the new roof, but now you also have to pay significantly more for insurance due to rate increases, or sometimes non-renewals, or sometimes insolvency with companies. Thing is that we need meaningful reform. There are a couple bills, SB 1728, that are going through committee. And I encourage you to reach out to your representative to tell them this has to stop. It has to stop. St. John's policies will go to Slide. Slide's got the capital right now. But if the situation does not correct itself, we could all end up with Citizens. And if everybody's with Citizens, it means that they get their money after a loss by sending everybody in Florida a bill. And I know for one thing, I pay enough taxes to not get more taxes to be able to pay for somebody's yacht. That's a bunch of BS. And I hope you join me and go to fltortreform.com, search up Florida Tort Reform. It's the first result that comes up. Learn more and send an email. That's all you have to do. Make a phone call. That's all you have to do. And help me and help others in this industry protect our customers and your pockets by stopping this. Appreciate your time. Thanks.